There is an interesting ratio that we don't often talk about that could lead to where gold prices are going to be heading this year. We're going to be taking a look at that article as well as discussing my biggest precious metals purchase of all time that I made yesterday. Welcome back, guys, to the Independent Experience. I'm IndyXP Bullion, and this is your morning market wake-up call for Friday, March 5th, 2021. We have had some big moves in the market since our last video on Wednesday. I apologize for not having a video for you yesterday. Things have been a little hectic around the office here, but let's go ahead and take a look at the markets this morning and see where we're starting today off at. Gold is struggling to stay above $1,700, currently at $1,702.28. Silver took a big dive yesterday. It is currently at $25.42. That gives us a ratio of 66.96. Platinum has made a pretty significant drop as well, currently at $1136.49. Palladium is at $2379.16, and rhodium is at an all-time high of $28,000. In base metals, we've seen significant drops there as well, but we are starting to see some good rebounds. Copper had dropped below $4, but it has rebounded, currently at $4.07. Nickel had dropped all the way down below $7.50. It has rebounded nicely, currently at $7.75. Aluminum is at 98 cents. Zinc is at $1.24, and lead is at 92 cents after dropping below 90 yesterday. Barrels of crude oil are up significantly. They're going for $65.46 a barrel this morning. We saw losses on Wall Street yesterday. The Dow was down 345 points at 30,924.14. The NASDAQ was down 274 points at 12,723.47. And the S&P 500 was down 51 points at 3768.47. We have seen a nice jump in the US dollar index, though. Those are pushing towards 92, currently at 91.90. If you guys trade in Bitcoin, it has been a little bit of a sour couple days for you. Bitcoin is down, currently at 47,683.36. And if you happen to exchange a gold back this morning, whether that be the Utah, the Nevadan, or the New Hampshire, those are trading at $3.08. That's right, the New Hampshire goldbacks have been released. If you have not seen the video, they were debuted on Yankee Stacking's channel just a few days ago. Very interesting video where he actually got to interview the designer, the artist for those that currency. So make sure, I'm going to put a link down below. Actually, it's a very interesting article. I'm going to put that link for Yankee Stacking's debut video for the New Hampshire goldbacks down in the description below. Check it out. Whew. As I mentioned, I made a very, very big gold purchase yesterday. Biggest purchase I've ever made in precious metals, right around $3,000. I split up between a couple companies, and we're going to be showing you that purchase, those purchases, once they come in, hopefully next week. Both companies have told me that because of sluggish USPS services, that they are experiencing longer wait times on getting products. So if I don't get them by Friday next week, I'm not going to be upset, but they're definitely going to be hearing from me. So let's go ahead and take a look at the article for today. This comes to us from Anna Golubova over at Kitco News. It is titled, "This is when gold price reverses, Goehring and Rozencwajg on $15,000 gold." That is... We're going to talk about the $15,000 gold at the end of the article. It's the last section of the article. We are going to skip around just a little bit in this article. Frustrated gold investors need to look at this specific metric for estimating a major price reversal in gold, according to Goehring and Rozencwajg managing partner Lee Goehring. Gold tumbled below $1,700 on Thursday as Federal Reserve Chair Jerome Powell continued to stress that inflation is not a concern while ignoring questions about rising bond yields. Quote, high inflation is a very bad state of affairs, but it is more likely that in the next year prices will move up but not stay up, Powell said during the Wall Street Journal Jobs Summit. When responding to the question about bond yields, Powell said, quote, I would be concerned with the disorder of the financial market or unwanted tightening. It's not about one particular price. This is a frustrating period for gold bulls, Goehring told Kitco News. Every rally gold has is almost immediately retracted. Some saw this corrective period coming, he said, pointing to silver's performance as a telling sign for what gold might do. In the gold bull market, you have periods where silver lags behind gold. Silver lagged from 2016 to 2020. Then in April to July last year, silver had a massive move up. To us, that signaled that gold was entering a corrective phase. We've been in that phase ever since, Goehring said Thursday. It is not an easy task trying to pinpoint a trend reversal in gold, but it should happen at some point in the second half of this year, Goehring said. That is when the second leg of the bull market will start. A useful metric to look at when determining gold's prices trends is the gold to oil ratio, Goehring highlighted. Quote, over the last several years, gold has been trading expensive relative to oil. Back in early 2000, 1 ounce of gold bought about 8 barrels of oil. Quote, gold was radically undervalued relative to oil. It is the opposite now. About 5 months ago, 1 ounce of gold bought over 50 barrels of oil. The ratio right now is down to 26 or 27 barrels, he pointed out. Now, there was one point last year, I think it was May or June, where you could have bought an infinite number of barrels with an ounce of gold because the price of oil was zero. They were just giving it away so they could get it off the tankers and get more brought out and on the boats. However, what investors need to watch for is the relative retreating closer to 15, meaning 1 ounce of gold will buy 15 barrels of oil. When that ratio hits 15, the gold market will bottom, said Goehring. Back in early 2000, when the gold-oil ratio was relatively low, gold was uninvestable because all central banks could not sell it fast enough. Now gold has become popular, but oil has become uninvestable because of climate change. I do think that whenever gold gets cheap relative to gold becomes the great investment, he added. This article kind of jumps around. They're talking about GameStop and meme stocks, which we don't need to talk about here. The end of the article does talk about their $15,000 gold prediction, though. Before the end of the current bull cycle, gold could reach $15,000 an ounce, and that is a conservative estimate, Goehring and Rozencwajg, managing partners, said. Quote, we still believe we will see $15,000 gold prices before the gold bull market is over. For patient investors with long-term horizons, we recommend aggressive accumulation of both gold and silver on any price weakness over the coming months, he said. The relationship that we look at is the amount of money that has been printed and the gold price. The trigger will be recognition by federal governments of the precarious financial conditions they are in, which will lead to direct monetization. Quote, this direct debt monetization could set off a massive inflationary problem as soon as mid-decade. So there we have it, the gold to oil ratio, which is not something we've talked about on this channel for a long, long time. I think it's probably been over a year since we've talked about it, certainly before the pandemic. He says that he claims that we should see that ratio come down to 15 to 1. which the price of oil is increasing quite a bit right now. We're up $5 in the last week and a half. So I do think that ratio should tighten on the oil side of things for us. So hopefully that will benefit gold down the road. What do you guys think? Do you think the gold to oil ratio is just some figment of imagination that these guys over at Goehring and Rozencwajg have made up, or is that a viable option for predicting where gold prices and obviously silver prices will be going? We have seen a significant dip in both gold and silver here in the last week, and then we've seen a downward trend in both over the last couple months. So let me know what you guys think down in the comments. I'd be very interested to hear what you have to say on the topic. Guys, I do greatly appreciate every single one of you. And if you happen to appreciate old IndyXP Bullion, do me a favor, hit the thumbs up button for me right there. It helps me out immensely. If you happen to be new to the independent experience and you want to keep up to date on when all the latest and greatest content comes out, make sure you hit the subscribe and jingle bell right there in the corner, bing bong, so you can stay notified of when new content comes out. Of course, we're going to pop the box up on this side of the screen. It's the gateway to the back catalog of videos. You can start clicking through those at your heart's content at the end of this one. Guys, I've been IndyXP Bullion from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.